I'm about to be joined by a dear friend of mine, Michael Lewitt, the author of the Credit Strategist. Michael is just such a brilliant writer. He's one of the best credit analysts I know, and he has a lot of outspoken views about many things in these markets. And the first thing I'm going to ask him about is something he's been very, very loud and he would say obnoxious about, and that's Tesla. There's going to be plenty more to talk about, but let's see what Michael's got to say about that. I sit here listening to you. You know, I have a tremendous respect for the work you do and the way you go about it. But at its core, it's simple, old-fashioned analysis, right? There's no magic to this.
No, but this is the problem. See, this is the problem across the board in all investing now. People don't do that anymore.
Exactly.
Because it gets back to, we were just talking about this. Most people, I shouldn't say most people, but many people are investing through ETFs today.
Yeah.
They don't even know what's in them, okay? So if you own an ETF, you park your brains at the door, you don't do research on the individual companies in it,
nope.
And you just buy the ETF. So if you buy I forget which, it's the energy, I think it's the iShares Energy ETF. Do people know that 25% of that is invested in mobile and that 50 or 60% of it is invested in four names? It's mobile, Chevron, I think it's Schlumberger, and
Royal Dutch, I think you're in there.
I forget the other one. But the point is, if you invest in ETFs, you're violating what I was brought up to believe, which is you do fundamental investing if you're investing in stocks. People have no idea what they're doing. That's how mobile can trade at 44 times earnings.
Which is insane.
This is a cyclical company where oil has dropped 50%. Yes, it doubled, but after it went down by 3/4. I mean, this is crazy. This is how Kellogg's, which grows at like nothing, is trading at over 30 times because it's in like, I don't know, a couple dozen ETFs. Yeah. This is what happens. Now, Tesla is different. Tesla is a cult. It is not a stock. It is a cult. And I keep forgetting the name of that firm, but the guy who came up with the $368 stock price, he said, look, people are going to have to get creative with their valuation.
Right,
they don't
exactly
have to get creative. They have to. It's a willful suspension of disbelief, which I think is what the Romantic poets talked about when they were, walking through the hills of England. Okay, it's just simply saying, I believe some other schmuck is going to pay me more for this stock because there's no rational basis for this valuation. You are counting on a miracle happening, the laws of economics, the laws of math being suspended. You're counting on no negative market event happening. You're counting on this long bull market continuing and so on. And if you want to do that, God bless. You might as well just go to Las Vegas and spin the wheel because that's all you're doing. Valiant was a different kind of story where you had a sort of another charismatic CEO who basically conned people into his stock, who I think lied to them, who had a really toxic business model built on debt, but nobody looks at, another reason why this happens is equity analysts don't look at the balance sheet. No. A quick look at the balance sheet tells you these companies stink.